All right. Today's SPY was down 0.33%. And just a quick comment, today we did see the semiconductor stocks getting absolutely hammered. The Nvidia blow off top I've been talking about is starting to play out. And the semiconductors are a major factor that has pushed the tech sector this high. And they are sitting at some critical support going into tomorrow, so do be aware of that. But today we are also seeing some sector rotation with the Dow Jones and the Russell 2000 going higher on a day that the triple Qs dropped 1.3%. So this is an exciting time to be a trader because this is the rotation and crazy volatility we were looking for, and now that we're getting it, this is going to lead to some great trading conditions. And this is going to be a great time to be in the Discord server because I will be throwing up a lot of trade ideas during this volatility. And volatility is the best time to be a trader because that's when you can capitalize on massive moves in both directions, and you could take advantage of intraday volatility as well. So if you want to be a part of my trading community and get access to those trade ideas, you can find out how to join my Discord server in the description of this video. So the first thing we need to look at with SPY today is that we did get that lower high bounce that I was telling you about over the weekend, that even if we bounced up to 547, there was a chance of a lower high before we continue lower to 537. So I don't see any reason to change anything that I've already said. If anything, it's looking more and more likely that my prediction is going to play out. Each and every day we get more price action because these lower highs and lower lows are exactly what the bears want to see. And when you get a lower high rejection that goes into a lower low, typically that means the sellers are in control and they do want to push price lower. And if you are a bull, you really have to ask yourself, why would I be buying here if we're going down towards 537 and I can buy much lower? So if you understand the psychology that even bulls do not want to buy here yet, and the bulls are looking to buy lower, and the sellers have the lower high into the lower low, so they are motivated to continue to sell this market. That is when you are getting both smart bulls and the smart bears agreeing with each other, and then they are both looking to push price in the same direction. You have bulls exiting because they want to lock profits, and that is selling pressure, and you have bears that have a lower high, lower low rejection, and they know that is going to be a good shorting opportunity, so they are adding selling pressure to the market as well. So bulls and bears both want to see prices going lower, which more than likely means it is going to be a self-fulfilling prophecy. Bulls will continue to sell, bears will continue to short, and price will continue to go lower. Now, one thing I'll warn you against is once we go lower and once we do hit support at 537, I will remind you this is a bull market, and that is the critical support that the bulls may consider buying at, and the bears will cover their short positions. So from today's close on SPY down towards that price target is about another 1% to the downside before we likely see buyers stepping back into this market. And that will be an opportunity for bulls to come back and bears to cover their shorts. And that could mean we go higher yet again in this bull market. So the difference between saying a market has topped and just expecting a pullback is just that, because after this pullback, we could go make another high, which means the market did not actually top. And that is where the bears continue to get it wrong because they're going for these home run short positions instead of just playing these easy base hits during the pullback where you get a very easy short trade until you get to support. So I do believe we are going lower. I can't guarantee it, but I do believe that is the highest probability chance. The risk and reward is getting more and more equal now because to the previous all-time high and to the price target is about a 1-to-1 ratio now. And if you shorted up here at the resistance that I suggested at 550, the risk reward was a lot better. But that doesn't mean the bears won't continue to short. As I told you, the chart allows for them to short with the lower high and the lower low rejection. And I do believe the bulls will be patient and wait for a better buying opportunity at these lower prices. Remember, if you are a bull, you are looking for the best risk reward to the long side, which means you want to buy as low as possible. And that's why even if you are bullish on this market, you should still be very patient while the market is pulling back and not go all in too early. If we come down to 537 and we slice right through it and you're a bull and you're still holding long positions and you have no more dry powder to continue to accumulate long positions, or you're getting stopped out of your longs, you are doing it wrong. Focus on the best risk reward entries, and right now the bulls do not have great risk reward until we get down to those lower support zones. So on SPY, watch 541. If we break below it, which I think we will, we're looking for that next leg lower to 537. And then 537 is going to be a critical point where the bulls and the bears will need to decide if we're going higher or lower from there. On the NASDAQ 100 triple Qs, we were down 1.3% today. And as you can tell from the arrow, everything is still playing out very close to what I drew here, which is that we would go down here towards this gap fill at 468. And again, if you are bullish, you really have no amazing buying opportunity opportunity yet until we go and fully close that gap and then run into the rising 20 daily moving average. So I do believe we will go a bit lower before we can go any higher. Once we get to 468 and close the gap, if we start to get buyers and the bears start to cover, then we could start to bounce, but even then it could still be a lower high bounce before we continue to go even lower. So I'm not extremely bullish. As you can probably tell, I've been warning a lot about this sell-off and this pullback and managing risk accordingly. And even once we get to my price targets, even if we start to bounce, I'm still going to be very cautious that it could be a lower high before the next lower low. So keep this in mind, and if you're building out a trade plan, which I always suggest that you have a trade plan that follows price, you should have this as one of your scenarios, as a very likely scenario that could play out, because this is a very probable case. I actually think this is my preferred scenario on the triple Qs. I do think we will go a bit lower, then I do think we'll bounce, and then I do think we'll go even lower to finish out a correction. So pay attention to this. This is definitely something you should be aware of and something you should be planning for. But of course, let the price action do all the talking, and we need confirmation from price that these arrows are working out. So the critical level in the triple Qs will be that gap for that 468, and then if we start to bounce from there, we'll be looking for resistance anywhere above at the levels given on the screen, which I'll read them out here: 474, 479, and 484. On the Dow Jones, we were up 0.67% today, and the Dow Jones now has the third day in a row over 391, which does favor the bulls, and the longer we continue to close above 391, it's looking less and less likely that this is a head and shoulders pattern, which I told you was a potential head and shoulders, because in order to confirm it was a head and shoulders, we needed to break down below the neckline at 384, and we did not. So the bulls are in control above 391, and we do have the Bollinger Band squeezing and starting to expand, and we are gaining the bull trend. So the Dow Jones is looking a lot more bullish, and with this configuration, if we could stay above 391, I think there's actually a good chance the Dow Jones goes to put in a brand new all-time high. That brand new all-time high would be the break of 400 and then the price target at 402. And then I do believe we could continue to go higher from there. So if you're in the Dow Jones, just stay bullish above 391 and manage your risk from there. On the Russell 2000 IWM ETF, we were up 0.43% today. So again, more rotation where we see the sell-off in SPY and the triple Qs, but we're getting money flowing into IWM and the Dow Jones. And right now, you can stay bullish in IWM with this bull breakout above 200, but we really want to see a really strong bull breakout and a very bullish candle that takes us all the way above 203 and 204. If we can get above this downtrending resistance, this will look like a bull flag before a monster leg higher, and that monster leg higher could take us all the way into the 220s. So if you want to wait to get bullish, I completely understand, and that's going to be the break above 203 and 204. But if you don't mind getting the low risk entry, just manage your risk down here at support between 198 and 199. On the ARKK ETF, we were down 0.18% today, and again, this is still a bear trend, risk off below 45, so we're not getting bullish yet. And if we do continue lower, we're looking for 42.4 and 41. On the VIX, we were up 1.14% today, and the VIX is continuing to creep higher little by little, and we are building out a base here, which means we could see a spike in fear if we continue this pullback. And the big spike in fear would be if we lose critical support and start to flush with high volume selling. If that happens, expect the VIX to go all the way up into the 18 and 20s. And it will happen very quickly, but again, I don't think it has to happen. I think this could just be a pullback before a bounce, and a pullback before the bounce means the VIX should only spike up to about 15. On Bitcoin, we are currently trading down around 59,000, and you can see the bearish scenario of this double top breakdown below the neckline at 67,000 fully played out, and this is the arrow that said we would come down here to the $60,000 support, and that has played out. And we even went out below the support, below 60,000 and below the Bollinger Band, and hit the next support lower at 58,000. So we can delete these arrows now because we got the bearish scenario and that played out below 67,000. And now that we're at 58,000, this is going to be a bounce or die situation, because if I zoom out here, you could see we have multiple tops in the low $70,000 range. And those multiple tops do have a neckline at 58,000. So this is an extremely critical support. But I do think from 58,000, we are going to get a very strong bounce back up towards 64,000. But obviously, if I'm incorrect, it is going to be a very nasty flush and a flash crash in Bitcoin that could take us down towards 53,000. So here you go. You have another very clear risk level at 58,000. Above it, we could bounce to another lower high at 64,000, but below it, we likely start to flush down towards 53,000. On Nvidia stock, we were down nearly 7% today, and this was a very controversial call where I said we were blowing off the top and we were going to go down just just as fast as we went up, and we were going to take the elevator down towards 116 down to about 107. And a lot of you disagreed with me, which is completely fine. Everybody has their own opinions in the market, and that's actually what makes a market. If we were all buyers or all sellers, there would really be no excitement to the market. However, you have to remember to leave your emotions at the door when you're trading, and you have to be able to acknowledge a blow off top and a parabolic rally. And I'm right there with you. I love this company and I love what they're doing and I love how innovative they are. But I can't ignore the fact that this is just a blow off top technical pattern. And that is why I told you it was likely going to come down in a big way. I'm not a perma bear on this company. I was one of the very few people that even told you it was going to $1,000. And it obviously went higher than that because that was the blow off top. Because once we hit the price target at $1,000, we just continued to go higher parabolically, and that is not sustainable. So from the previous all-time high to where we closed today, we've already had a full 16% correction, and it's only been 3 trading days. That is the danger of a blow-off top. If you're blindly ignoring the fact that you're in a blow-off top, you can get very damaged very quickly, especially if you're buying up here and then trying to buy all the dips. So if you are still buying up the dip in Nvidia stock, all I can tell you is that you are playing with fire, because in a blow-off top, we are likely going a lot lower. And I'm not putting a limit on how low we can go on this thing, because I do believe there's a chance we go all the way back to 95. I'm not putting a time frame on that. I'm just telling you there's a good chance we're going a lot lower. And I'm just trying to warn you against blindly buying the dip in this stock just because it's bullish. It can change very quickly, and nothing changes sentiment faster than price. Everybody is bullish on this stock. Everybody wants to own it, but watch how quickly that changes when the price action continues to flush down lower. And then those people that are buying the stock are underwater on the position, and then all of a sudden the sentiment is going to change and people are going to hate this company. That is why we objectively trade price action and not emotions, because your emotions will change with the price, and if you're in a losing or winning trade, and that is not a trade plan. At that point, you're just trading by the wind and you're trading on how you feel, and that is a good way to lose money. So once more, I do think this is going a lot lower. I think all bounces will be sold, and I think we will continue to go lower to at least 115, and if we break 115, I'm looking for 107. Doesn't mean I'm going to be right, but it does look like this arrow is playing out very closely to how I drew it. Even though it did go a bit higher than I expected, it is still happening the way I predicted. So be very cautious. Even if we bounce, we're likely going to find resistance now in the low 120s. On Tesla stock, we were down 0.23% today, and once more the bulls keep getting faked out here because it looked like we were going to break above 185, but as you can tell, the candle closed below 185, but still above a rising 5 EMA, and we still do have a bull trend, so I still do believe it is okay to stay bullish above 178, and as long as we're above 178, it is possible this is a higher low before the next higher high. So as you can tell from the arrow, I think we are going to 207, but you need to manage your risk at 178, and if we break below 178, you need to start getting more risk off, because it is still possible this is still a downtrend and this is just a lower high bounce because we never actually broke the previous high in the 190s. Now I am leaning bullish, but we do have very low risk to be bullish because we'll know it in the price action if we start to break down. If you want to stay bullish even longer than 178, then you would be using that risk level down here at 173. On Apple stock, we were up 0.31% today, and I still think this is risk off below 212, and you can see intraday we bounced up to 212, and then the seller stepped right back in yet again, and we continue to close down below the 5 EMA. So I think there's a good chance while we're below 212 that we're coming down towards 204 and possibly even 198. If we go all the way down to 198 and find support, I think I would start to get a lot more bullish, but right now this looks like a double top rejection while we're below 212, so I'll caution you to stay risk off. So jumping back over to the S&P 500, as I've been warning, we are very close to a very critical pivot in the market, and while I do not think this is the top that is going to mark an absolute top in the market, I still do believe this is a market that should be risk off while we are getting these lower highs and lower lows. I think we have a bit lower to go, and then once we get to where I think we're going, we need to see if the buyers show up. And if the buyers do show up, we are still in a bull market and we are still in a bull trend, so it is still possible that we continue to go higher. So do not become overly bearish once we get to support. That's when you want to be locking profits on your short positions and even consider buying the dip with low risk entries. And of course, make sure you are buying high quality names that are in bull trends and not the crappy stocks that are going lower. This is going to be a very fun market to trade. I think it is going to get very volatile, and I think it's going to remain volatile through the remainder of the summer. And that is why I think this is a great time to be in my Discord server, where I'll be sharing lots of trade ideas and taking advantage of the intraday volatility. Intraday volatility is a great time to be a day trader, and then once we get deep enough pullbacks, it'll be a great time to load up some swing entries on some very high quality stocks. So if you want access to all of my intraday updates, my technical analysis, and my trade ideas, that's in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.